Hey, what's up, my friend? So, in today's episode, right, I want to talk about how do you overcome your fear in trading, right? Because here's the thing, I know, you have fear in trading, Rayner, what if I click the wrong button and I blow up my entire trading account, Rayner? I'm not sure if you have that thought, right? But that actually occurred to me, right, in my early years of trading. So, in today, I want to share with you some of the common fears in trading and how you can overcome them. And before we get started, I just want to credit to Mark Douglas because he came up with something called the 4 fear of trading. So I took that concept, that idea, and tweak it. And in today's episode, I will be sharing the 5 fear of trading and how you can overcome it. All right. So fear number 1 is the fear of the unknown. Hey Rayner, what if I put on a trade and I lose everything? What if I lose all my money? Hey Rayner, what if I put on a trade and a piece of news come up and I end up wiping out my entire trading account? So these are the fear of the unknown. You have no idea what you're getting involved with. You have the fear of, just losing money for nothing, and you don't want that to happen. So to overcome the fear of the unknown, you have to expand your knowledge. It's just like, driving a car. If you take someone who have zero driving experience and you put him in a car, guess what? That person will be a road hazard. He will be afraid of everything and anything because he doesn't know what he's getting involved with. Where is the accelerator? Where is the brake? What is the steering wheel? Fear of the unknown. He doesn't know. He's completely blank up here. And the way to overcome that fear is to gain knowledge, gain the relevant skills and expertise. And it's the same for trading. If you are a blank, if the here is blank, you must expand your knowledge, right? Read books, take up courses, listen to podcasts, listen to the Trading with Rayner show, expand your knowledge. And once you have acquired knowledge, once you have upgraded your skill set, then the fear of the unknown is minimized. You won't know everything still out there, but you will know enough, right? So that you're not a hazard to others, you're not a hazard to yourself. Okay, so if you are suffering from the fear of the unknown, go and expand your knowledge. Number 2, the fear of losing. Hey Rayner, I have no idea why every time I put on a trade, my losses are always larger than my winners, right? Why are my losses always larger than my winners? What's going on? And then you have the fear of losing, right? You are so afraid of losses because, it always hurt your trading account, losing 50%, 60%, blowing up multiple trading accounts. So the way to overcome the fear of losing, or rather the way to manage your losses, is very simple. It's all math. Simple math. Okay, so it's all about risk management and position sizing. And I can't go into full details in this short episode, but if you really want to learn it, just go down to my website, tradingwithrayner.com, search for risk management, right? And I have articles and videos, right, dedicated to helping you manage your risk, right, and do proper position size such that, every time you put on a trade, even if that trade goes against you, even if that trade hits your stop loss, the loss, right, will be contained. The loss, right, will not be more than 1% of your trading account. If that's something that interests you, just search my website for that, right, risk management, and you'll find something, a resource, right, that will assist you with that. That's how you overcome the fear of losing, right, by practicing sound risk management. The third thing, right, the fear of being wrong. Man, I hate losing, right? Losing sucks. I get it, right? Nobody likes losing. We are brought up in an environment since you were young, right, that, you must be correct, right? When you're correct, then you get, praise, you get appreciated and stuff like that. And I don't like that teaching because it trains children, it trains kids, right, to be perfect, to not make mistakes, and to not be wrong. Okay, and this is bad, right? Not just in life, but when it comes to trading, it's disaster. Because in trading, we are dealing with probabilities. Let's say every time you toss a coin, you make $2 when it comes up head. If it comes up tail, you lose $1. And clearly, when you come up tail, right, you lose $1 each time, and you hate being wrong. But if you learn to look at this at the grand scheme of things, you realize that this is all probabilities. This is all about the law of large number. Nothing is certain. Trading is all about probabilities, never certainty. Tossing that coin is all about probabilities, never certainty. Opportunities out there in life, in the markets, is all about probabilities, never certainty. And you must embrace probability. You must embrace, right, that even if all the stars are aligned, you can still be wrong. That's trading. That's life. Okay, so the fear of being wrong, I get it. It sucks, but you must embrace it, because if you can't embrace it, it's going to be very difficult, right, to trade well. Okay? And another tip that I have for you is that if you hate being wrong, if you hate losing, there are ways around it in trading, right? One way you can go about it is to adopt trading systems with a higher win rate. So here's the thing, right? Not all trading systems are created equal. For example, a trend following system, it wins about 40% of the time. But the reason why trend followers make money in the long run is because their winners are larger than their losers. For every let's say every dollar that they lose, they make $2 in return on average. So even with a 40% win rate, trend followers can still be profitable in the long run. And of course, that's not the only way to make money, right? Mean reversion trader, right? Mean reversion in the stock market is on the opposite end of the spectrum. You have a higher win rate, a 70% win rate, usually on average. And this is really for those of you who hate being wrong. If you want to have a higher win rate, you can consider, trading mean reversion trading systems in the stock markets. One example I have is the pullback stock trading system. Again, you can just I'll put the link below, or you can go to my website tradingwithrayner.com and you learn more about it. So these are trading systems with a higher win rate, and of course, it's not all perfect. With higher win rate trading systems, the downside is that your average gain to loss, right, is slightly different. So let's say for every dollar you lose, right, your return might be, let's say, 70 cent or 80 cent, right? Meaning your losses are actually larger than your winners. But the reason why this work out mathematically in the long run is because of your high win rate. So if you're someone who hates losing, right, maybe trading systems with a higher win rate might make sense for you. Okay, so this is how you overcome, right, the fear of being wrong, right, by embracing probabilities and adopting systems with higher win rate. The fifth one, the fear of missing out. Rayner, I missed the bull markets. Rayner, what now? So, yep, missing trading opportunities is, again, right, part and parcel of trading, right? We are not able to catch every single move out there in the markets, but we can definitely minimize that from happening. So 2 tips to share with you. Number 1, systemize your trading approach. If you can adopt a quantitative trading approach into your own trading, that's better because it can help you scan the market universe to make sure that you don't miss out any trading opportunities. So this is more towards quantitative trading, systems trading, right? So for discretionary traders, another approach, or rather a way out, is to set alerts, right, on your own trading. So for example, TradingView, I believe it allows you to set alerts, right, whenever the price comes to a certain level. Set alerts, right, so you'll be notified whenever the market reaches a level of your interest, I think via SMS or email or whatsoever. This is how you can actually overcome, right, the fear of missing out. And finally, right, the fear of giving back profits. Rayner, I'm up $500 and then the market reverses and take all my profits, right, and I'm down a negative 100 at the end of the day. Fear of giving back my profits. So one thing to share about this is that giving back profits, right, is it depends on trading methodology. For example, if you are a trend follower where your goal is to ride trends in the market, then guess what? You have to be comfortable giving back open profits, because that's the only way you will ride a trend. You know that a trend, right, it doesn't go up in one straight line. It goes up, retrace, goes up, retrace, goes up, retrace. So the way you're going to ride trends, to capture trends, is that you must use a trailing stop loss. And here's the kicker, right? You never know if the market is going to make a retracement or a full-blown reversal. You never know. That's why you have a trailing stop loss in place. And by not knowing the market, whether it's going to make a full-blown reversal or a pullback, you have to accept the fact that sometimes you will have the market hit your trailing stop loss and then reverse back in your favor. And this means that you will get stopped out of your trade prematurely. And there will be times, right, where the market hits your trailing stop loss and you're glad you got out at your trailing stop loss because the market reversed and collapsed all the way down. And here's the thing, no matter which scenario it occurs, right, for the market must hit your trailing stop loss. And when it hits your trailing stop loss, you have to give back some open profits. That's the nature of trend following. That's the fact, right, of riding trend. You have to be willing to give back open profits if you want to ride trends. So if you have the fear of giving back open profits, you don't like this approach, then don't go with trend following. That isn't for you. Then what you want to consider is a swing trading approach, where you look to capture swings in the market. So for example, if you are buying at support, you can look to sell at resistance, right? So you're just capturing that one swing, that one move. Shoot, that's it, right? So in such a trading methodology, you are, I won't say you can avoid giving back open profits altogether, but it is minimized, right, compared to someone adopting a trend following approach. So if you hate giving back open profits, consider going with a swing trading approach, right, capturing one swing, maybe at a swing high, at resistance, etc. Okay, so a quick recap to what we have just discussed today. Number 1, fear of the unknown, overcome by expanding your knowledge. Number 2, fear of losing, overcome by practicing sound risk management. Number 3, fear of being wrong, embrace probabilities, right, and adopt systems with higher win rate. Number 4, fear of missing out. What you can do is adopt a quantitative approach where you are scanning the markets or set trade alerts, right, for discretionary trader. And number 5, the fear of giving back profits. You can adopt a swing trading approach to minimize that from happening to you. So with that said, I wish you good luck and good trading. I'll talk to you soon.